Hey traders, this is Jeff from zentrader.ca with a market update. I hope everybody had a great weekend. I know that the Christmas party season is in full swing. We had 3 this weekend, so hence the late update. So I wanted to start off on last Wednesday. We got a buy signal with my market timing indicator. It really triggered perfectly on Wednesday. It was essentially at the lows, and I sent an update out to those of you on my free newsletter, and then basically the rest of the day the market rallied and it looked good. But then Thursday, macro news out of Europe, fear really notched up and the markets really sold off. But this is why it's so important to number one, buy at the right time, and number 2, don't pay attention to the news. Because even though this market had such a terrible sell-off on Thursday, we literally maybe fell 10 to 12 points below this buy level when I sent the alert out. Therefore, it's a little bit easier to sit through a sell-off when your positions aren't necessarily in the red. And so what I did on Thursday was pretty much stayed away from the market. I spent it kind of, when I say staying away from the market, I didn't want to be watching my positions be in the red. I didn't want to get shaken out because I felt that this was a really good buying opportunity on Wednesday for a short-term trade. Everything is lined up with my timing signals, sentiment, volatility. Everything looks good. And we bounced back on Friday with full force. So on Thursday, I bought some positions in the Qs, and I can't even remember what the other one. But basically, they were long ETFs that would have gone up if the markets bounced. That's exactly what they did. I took some of them off the table at the close on Friday because I was fairly heavy. I was kind of placing a big bet Wednesday and Thursday afternoon, and it worked out. So I still have some positions. I'm still in a crude and gold actually down significantly in the futures markets, which is a little bit surprising given everything that's going on in the macro news. Let's quickly get to a couple other charts here. An area that I was saying we could pull back to basically on like Monday and Tuesday of last week, or Tuesday and Wednesday rather. I thought we could make it down to this 1200 level. I thought that we were forming a little bit of a bearish rising wedge, and we did work off some of that pressure on Thursday, and then we had a nice big bounce back, and we are approaching resistance again. So it's going to be interesting, and that's part of the reason why I took that big day on Friday to unload some of my long exposure, because at least for me, my time frames are very short term right now because of the volatility. You kind of have to be. About the only negative that I'm seeing right now. Here's this 3-line break chart of the NASDAQ. We do have one red bar. So I'm watching that to see if the next bar is another one, or if it may end up looking something like, let me see if sometimes, for instance here, you have to think in reverse here. Sometimes when there's a trend in place, you'll get one crazy bar going in the opposite direction, and then the next one will follow through in the primary trend. So if we get a big white bar that goes above this one, then we're probably going to get a nice Santa Claus rally follow through to the end of the year. If this prints a red candle, then I think things could get a little bit in trouble. Quickly, oil, we are at resistance again. I do have a long position in oil. I may be looking to sell out of it this week, or maybe I will just sell some calls against it. I haven't decided. I'm going to kind of wait and see how this week opens up and make my decisions there. But things are looking a little rough for oil. Copper is in a wedge, and it's at the top of the wedge. So this isn't looking so good either, so I would keep my eyes to see if this is going to reverse and head lower, or if it can break through, guys. So take care. I'll have another update tomorrow.